thanks for coming today. Today's session is put on by MetaStock. I've worked for MetaStock for a number of years. We're really, really happy with kind of the software and kind of the things that we've been doing. And all of the experts today are going to be using MetaStock. So if you want to get a free trial, you can log on to metastock.com/tradersummitt. And I also want to spend just a few minutes to thank one of our sponsors, Technical Analysis of Stocks and Commodities, which is an awesome magazine, probably the one you need to have as a trader. When you registered, you could have opted to get a free copy. I hope you did. I also want you to know that if you take advantage of any service today, whether that's MetaStock or some coaching programs or anything like that, Technical Analysis, Stocks and Commodities is actually going to give you 5 months for free. And if you buy anything that's actually over $300, you're going to get a 2-year subscription. Also, one thing to note is every subscription that you get to Stocks and Commodities includes access to everything they've ever published for since 1982. So it's a really, really good magazine. And certainly it's important as you trade to kind of be aware of what's going on in the market, kind of keep your eyes open for other opportunities and other methodologies that might work. So I'd really recommend Stocks and Commodities. Our first speaker today is awesome. His name's Rob Hoffman. Rob and I have met at a trade show, and we've known each other for a number of years. Absolutely love Rob. You know, one of the things that I always say when I kind of do my presentations is the best part about my job is I get to talk to a lot of people that I would say are a lot smarter than I am about trading. And Rob Hoffman is a world championship. Last year, he won the international championship in France. He was the first American to ever win it. He won it again this year, so that's 2 years in a row. He wins a ton of trading competitions, and very, very smart guy, really knows what he's talking about when it comes to the market. And you know, that's really the kind of people that we go after with as partners, is really the people that know what they're talking about. And so we're really excited to bring Rob on, and I'm going to bring him in.
Okay, great. Thanks, Jeff. I'll go ahead and I'll grab the screen here. And listen, good morning, good morning, good morning. Hopefully everybody, I just want to go ahead and thank MetaStock, thank Stocks and Commodities Magazine, and most importantly, thank all of you, because I see there's a lot of people here from the West Coast this morning, and that means it's 5 o'clock in the morning your time, and you know, it's on a Saturday morning. You know, you're dedicated or crazy like I am, so I want to go ahead and thank each and every one of you that's as dedicated and crazy as I am for all being here, and then of course for all of our friends are in Singapore, Malaysia, and Thailand. It's a great day to be Singapore, Malaysia, and Thailand for this presentation. So top of the morning, top of the evening to each and every one of you there. Let's go ahead and I just have a couple things I want to get through, and then we'll go ahead and actually, what I want to do is I want to share a couple opening thoughts with you. Then I want to go ahead and actually teach a trading strategy that I use in my live trade room, show you a couple of videos with it, show you a couple of recent examples of me using it, and then of course this is a strategy that I use to win these international trading competitions as well. So this is great, you know, the real live stuff, which is I suspect why you guys are here this morning to go ahead and be a part of this. A lot of people talk about trading, a lot fewer people do it. So this is great because this is something that I'm actually doing and using. So with that being said, just a couple of housekeeping notes here. Trading, not only involves profits, it involves risks as well. And always consult your registered financial representative before going and taking any trades or, doing a live trading at all there. Also, we might be talking about options because we have an incredibly awesome options program as well that also uses this work. So the strategy I'm going to share with you today, if you're a stock trader, an options trader, a futures trader, a forex trader, this setup can be used by you. And actually, we're going to show you different examples in some of these here. So this is pretty exciting. No matter who you are this morning, what you like to trade, and we've demonstrated that not just in our live trading room, but also, like I said, this fantastic options portfolio we have as well. So, but keep in mind, this is a great place that you can get more information about option risks as well as the benefits of different strategies there. So I just wanted to share that with you as well. Okay. As far as Jeff already showed you my picture, we don't need to see that again. The thing that's basically most important about me is Jeff kind of alluded to that I don't just talk about trading. I kind of go out there and do these live all over the world, both domestically here, where I do these trading competitions. Like the Traders Expos and that, but then I do like, and also like domestic, like 8 trader competitions here as well. But then, I was had the good fortune to go over to France 2 years ago, became the first American to ever win that trading competition over there, and then went back last year and won it again. So we'll take a look at that for just a few moments. But before we get into that, I want you to understand that I didn't start there, gang. I started just like each and every one of you, and that's the big misleading thing. When people think I was like born with some sort of genetic disease that allowed me to be a good trader or something, that's not the case. I went to a library as a teenager. These are the actual books from the library that I checked out as a teenager here, and of course I go back and look at those things now. How to read the Wall Street Journal and the different language of Wall Street and things of that nature. Just a whole bunch of stuff there. That's part of my collection now. So I had to learn just like you guys did. And also I had 3 jobs. I had 2 full-time and 1 part-time job. And, the difference is I just didn't quit, okay? And meanwhile, all during that process, I was raising this young man right here. This is my son. I'm very proud of him. He's a United States Marine. And I'm very, obviously pro-military, and proud of that. My son, serves, and many of you all around the world have served, honorably in the military or gone ahead and had your children go ahead and serve, and so you can imagine that this is, very near and dear to my heart. In fact, to that point. What I did was my company has grown in such prominence out there. We actually did. You guys probably all remember the big sequestering issue that happened here last fall in the United States, and there was a few weeks where death benefits weren't being paid to military families. I went out there in conjunction with MarineParents.com because there was Army soldiers, there was Marine soldiers, there was various soldiers from different branches of the military that they weren't paying out that $100,000 death benefit. I came to all of you that were part of my student family and said, look, I will give you free services for a month if you'll make a donation to these good people here that were dispersing that money to help those families in the absence of that death benefit. And if you go to that MarineParents.com, you'll see us. We're the top corporate sponsor over there, right at the top of the list there, and that's right up there along with Google, 3M, Walmart, Microsoft, and more. So, very proud of what we've been able to accomplish with that. So as we just look briefly for 2 or 3 slides at this international competition in Paris, France, this is very different than like these online internet ones that you hear about, like Robin's Cup and stuff like that, where basically you got a bunch of people sitting around in their jammies going ahead and trading against each other, and a lot of those people are retail clients. This is a situation where 16 traders from around the world are handpicked to go ahead and be at this event, and what happens is they line us up like a bunch of cattle, and it's a 12-hour event, and it goes from 16 traders down to 8 traders, down to 4 traders, down to 2 traders, and then somebody has to win. And you have to place at the top of those rankings each time. You can't just win one round and then go ahead and sit there the rest of the time and not trade. So I had to keep winning round after round. So I had to, and we've had top, big names from the United States have gone over to this before. None of them ever made it past the first round. There's a lot of fierce competitors that are handpicked to be a part of this big event, and so it's kind of a big deal. So you're kind of lined up like a bunch of cattle here, in the first round, and then after that first round, you go ahead and eliminate 8 people, then you eliminate 4 people, then you eliminate 2 people, and then it's the final 2. So it's about a 12-hour event there, pretty intensive. Everybody starts out with 50,000 euros live real money, and then it's very intense during the competition. That's why this strategy is very important. For those of you that are futures traders or day traders of stocks, the strategy that I'm going to share with you today is very important. Or even if you day trade options, if you do high delta in the money plays where you're looking for instant gratification in the middle of the day, this strategy is important. So here you can see me in the final round of this last year's event here, and you just see you got judges standing all over you. And so I had 3 judges standing over me, and then the head judge over here going ahead and constantly monitoring things. So it's a very intensive, because it's a real money event. It's a 50,000 euro event that everybody starts with live real money. It's their own live accounts, and so it's kind of a big deal. So, as you know, I was fortunate enough to win a second year in a row that competition, which was great. And so now today, what I want to do is I want to share with you, one of the strategies. So I have lots of different trading strategies. The one that we're going to share here today, and then I want to show you some video clips of it in action. I want to go ahead and show you a couple of examples of trades that I've done recently with it, and then of course the trading competition ones as well. It's going to be the accumulation distribution breakout trade. All right, so, and again, just as a reminder, this this has been something that helped me win, in particular, the 2013 trading competition over in Paris, France. And again, I wanted to give you guys an idea of quickly what that competition looked like, because those are real money competitions. Rather than these simulator-based ones, or these ones where everybody's trading in their jammies, online and stuff like that. It's a whole different world being in that live environment against other hand-selected traders to be there for top traders from around the world. So, and also this helped me win the New York trading competition. Not this year. I did win it this year again as well in 2014, but the setups that I used were different. But it did help me win the 2013 New York Traders competition as well. Okay, so and as we're just about to get into the actual setup here, I want you, this is our options alert portfolio. This is all the trades that we've taken in this options alert portfolio here, and we've had 2 losing trades where we've closed them out as losers. Everything else now has closed out as winners. We just closed out several more trades this past week or 2, so we have 1 open position, and then we'll be putting on a whole bunch of new positions after we go ahead and get through earnings here. But we're basically at officially now over 97% profitable based on our closed P&L here, our closed positions. We've had 2 losing trades here, so out of all these trades. So it's, like I said, we're over 97%, and we've now closed everything out except for our SPY trade. So great stuff. So this strategy is one of many of these that we use for that. So let's get into the strategy, okay? And again, I'm excited to see so many people here at 5 o'clock, 5:15 in the morning Pacific time, and then all of you that are here. So let's give you some great stuff this morning. So what I'm about to give you the parameters for is what this accumulation distribution. I just wanted to kind of at a high level share with you what that is, and then we'll get into more specifics. What I'm basically going to be looking for, I'm going to be looking for a downtrend for accumulation bars. Okay, so I'm looking for a downtrend, and then I'm going ahead and looking for the bars to come, 45, 50% or more back off their low. So we've got a downtrend in place. And now I want to identify bars that are coming 45, 50% or more off their low. Okay, here's another example that you can see. So what I'm asking myself is there basically 45, 50% or more of this bar? Is it wick on the downside? And you can see the answer on this one is clearly very, very much so yes. This one over here is clearly 45, 50% or more off the low here. This bar right here, these are all individual examples. It's not like a pattern of 4. And that's why I wanted to note that down here. Okay, it's not a pattern of 4. It's 4 individual examples. So here, market's coming down. Now we see this bar here where 45, 50% or more off the low. And then right here, 45, 50% or more off the low. So that's what I'm looking for in a downtrend. Okay, in an uptrend, what I'm going to be looking for is distribution bars. So here we have an uptrend in place. And now what I'm looking for is bars that are coming 45, 50% or more off They're highs. Now, it doesn't matter if the body of the bar is red. It doesn't matter if it's green. What matters is, can I look at this bar and say to myself, hey, I've got 45, 50% or more of wick showing on the top of this, okay? And so as we look at these 4 different individual examples, we can see each 4 of these individual examples was at least 45 or 50% off the high of wick. Okay. Now, before we get into the the overall specifics of the trade, where to enter, where to exit, all those things, what I want you to understand is basically what I'm looking for here. I'm looking for institutional participation. I want to see, does the market go ahead and have so much energy coming into it by one or more institutional firms that not only can they stop the market from going down, but they can go ahead and drive it back up. Does that make sense to everybody? Not only can they stop it from going down, but they go ahead and they will drive it back up. That's what I'm looking for, okay? And so in a downtrend, I want to see, can they drive it back up at least 45, 50% or more off the low temporarily. In an uptrend, I want to see, can they stop it from going up and then actually drive it back down. So this helps me identify areas of inventory where somebody's got large positions to either close or large positions that they're opening. So like in this case, they're either closing large long positions, okay, so they're starting to sell into the market, or they're taking fresh short positions. All right. Now, before we move on to the next slides here, the time frame here is basically a 2-minute, 5-minute, 15-minute, hourly, daily, or weekly is usually what I'm using on an intraday basis. So like in my live trade room, which I'm going to show you examples of that, or like the trading competitions, I'm using it on an intraday basis. For my fantastic options program with my friend and colleague Randy, we're going ahead and looking at those on a daily and weekly basis. I'm going to show you examples on different time frames in just a few minutes. Okay, so it's a very fractal opportunity here. That's what I was trying to tell people just a little bit ago, that we're very excited about that. And by the way, yes, hello to you, Jose, over in Switzerland. So 2 p.m. there. That's wonderful. That's why I said for our European and Australian colleagues and that, great timing today. So let's go ahead and take a look now a little bit deeper at this. Here's some actual trades, and I want to get into the specifics of the trade, but I just want to show you some recent examples, and then we'll revisit this slide a little bit later. So what I'm looking for is, I'm looking for a downtrend in the market, and then I'm looking for these bars that come back 45 or 50% or more off the low. Okay, downtrend. Here's a bar that comes 45, 50% or more off the low. All right, here's the downtrend again. And you can see then we got this bar that's 45, 50% or more off the low. Can everybody see those 3 bars that we went ahead and highlighted there? So this guy right here, this one right here, and this one right here. Now, what I'm looking to do then is enter 1 tick below the low of those bars in a downtrend. Now, if we were in an uptrend, I'd be looking to enter 1 tick above the high. Okay, but of course, as you know, the last couple of weeks we've had nothing but a bunch of great short side opportunities, right? It's just been fantastic trading, and if you've been following along with my nightly videos, we've been talking about this all year long, and it's 2014 is the gift that keeps on giving here. It's really exciting trading this year. So as we go ahead and take a look, so what I'm looking to do is get short 1 tick below the low of those bars. Okay, I just wanted to kind of show this to you so you get a little visual idea before I throw the actual slide to you here. So let's look at the slide now. Now we'll go back and look at all sorts of examples. All right, so what is the trade? It's a price action based breakout trade, but it's not just a traditional breakout trades. Most breakouts in general fail. This has more science behind it as I'm looking for that institutional participation. I just want to make sure everybody understands that. Now, when do we use this? Most effective in trending markets. I cannot emphasize that enough. The better the trend, the better likelihood that this is going to go ahead and work. The flatter your trend in the backdrop, the more likely you might be like every other breakout trader finding failed trades. So you really want to see those trends. For those of you that are longer term, investors in that, this is great from if you combine it with fundamental analysis, because fundamental analysis is wonderful, but the problem is that you could have a great fundamental story on a stock and sit on dead money for 3 months, 6 months, a year or more. So wouldn't it be great to go ahead and see if the fundamental story then gets a technical breakout to tie with it? That's where things can really heat up and be a great trade. So how do we identify it? Now this will make more sense to you. We look back over approximately the last 20 periods, and notice I said periods because it could be, again, 2-minute, 5-minute, 15-minute, hourly, daily, weekly bars. And we're asking ourselves, we're looking at, where the opens and the closes are approximately 45-50% or more off their high in an uptrend, or 45-50% or more off their low in a downtrend. So basically, we're just looking at it and saying, hey, how much wick is showing? If it's approximately 45-50% or more, I've got my signal bar. Okay. Typically, we're looking to take the entry 1 tick or 1 cent above or below that signal bar when that signal generates. Where's my exit? I trail trades, and I'm going to show you my trailing strategy in just a few minutes. Where's my stop? Typically, it's 1 cent or 1 tick below or above the opposite end of the signal bar, or a predetermined loss value, and we'll show you why that is in just a few minutes. Think about the concept of rocket fuel. If it's moved too far of a range too quickly to try to break through that signal bar, then it's more likely to fail. If it's got diverse applications, again, we have this incredibly successful options trading alert program, and that's can't emphasize, it's an incredible program, and we use this strategy as part of that program as well. Again, trailing your entries will help you reduce the risk of RTM, that's reversion to the mean, and then trade in the direction of the fast trigger, core trigger, and momentum indicators. That's the indicators you saw on the screen. We'll look at those just a little bit more in a few minutes. Those can be found at becomeabettertrader.com/GoPro. We are actually in the process about to have those available for that special offer for MetaStock as well. Currently, the indicators are available for outright purchase through MetaStock. So, but that program there, they'll be available very shortly for. So, again, now as we go back and look after you've just gone ahead and taken a look at this, gang, I'm going to be throwing a lot of information at you. I'm a real trader. I win real live, real money only international and domestic trading competitions. I trade live in my live trading room right there on the screen in front of people each and every day. This is as real as it gets. A lot of people are going to talk to you about trading, but very few people do it live in front of you. So I'm going to be hitting you with real world information here, so I hope you're taking lots of notes. And so as we go ahead and we look now, after we've taken a look at those rules, let's just take a look at that again. We're looking at that downtrend. We're looking for those bars that come 45-50% or more back off their lows. Okay, 45-50% or more off their lows. When they then go back down and push down, what I'm looking to do is go short 1 tick back below, because remember, basically the trend is down. And so what I'm looking for is, does it have this short-term respite, this short-term retracement back up where there's inventory? And so what will happen is I'm looking for that inventory to show its ugly head, and then I'm looking for that inventory to dry up. Does that make sense, gang? I'm looking for that inventory to show up. Show me that institution or institutions that were buying it and holding the market up are no longer there, and then the market can resume its trend to the downside. Okay, that's basically what we're looking for. And then in an uptrend, we're going ahead and doing just the opposite. So the market goes up, it pulls back here. Now I'm looking to see if we can break 1 tick or more above the high up over here. Okay, does that make sense? Yeah, and be careful. Take notes, because you don't know. Recordings, are not fail-proof, as we've all found out the hard way. So, make sure you take as many notes as you can during the event. If the recording turns out, then it'll go ahead and be that much better for you to reinforce the learning. So that's kind of what we're looking for. Let's take a look at some examples here. This is one that I like to go ahead and share with my institutional clients that I teach. So I thought I'd share it with you guys here as well. So this is Apple. So what you see is Apple's in a downtrend. You see my momentum, my fast trigger, core trigger, everything's firing off. 20-period exponential moving average is down. Now, everybody can go ahead and see here we've come 45, 50% or more off the low. Does everybody see that? Everybody see that bar? 45, 50% or more off the low. Okay. Now, what we're looking to do is we identify that bar. That is now the signal bar. Okay. So what happens then is now we're kind of drawing a line into the future. And if we break through that line, we're expecting this market to go ahead and die a horrible death. All right. So what happens is show me where an institution or institutions was coming in here and either buying fresh long side trades or covering their shorts from up above, and that they have, and so that not only were they able to stop the market from going down, but they were able to drive it back up. And like in this particular case, this is a weekly chart of Apple. This is a daily chart of Apple. Okay. In this particular case, you can see not only did they stop the market, but it actually then went up for a couple more weeks. But look what happened here, gang. Look what happened a few weeks later when it got back down to that level. It stopped. It stopped cold at that area where the institutions started going ahead and accumulating it. Does everybody see it? When they either started taking fresh long positions or buying back their shorts. Well, so then the next week comes along, it actually goes up for a week. See it? But then look what happens when it finally broke below the low of my accumulation bar. It dropped $30 in a week. Now, for all of you stock traders, okay, obviously you can look at trading the underlying instrument in a situation like this. But how about if you're an options trader and you're betting that the market is going to go down, because as soon as it breaks through here, what are some of the strategies that we can do as well as options traders? Yeah, we can go ahead and we can buy puts, right? If you're a buyer of options. If we're a seller of options, we can sell calls, sell call spreads, right? So we have lots of different opportunities there. If we're betting now, as it's breaking through here to the downside, that it's not going to go up here. Makes sense? So it's a great opportunity for both stock traders and for options traders alike. All right. Now here's another example of it over here. The trend is still down. We're still down from the indicator perspective. We have another bar that's 45, 50% or more off the low. Okay. And so what we're looking for now is to break back down below there. Let's talk about stops for a moment. So the stops on these, the stop losses. So we talked about the entries. Okay, we'll talk about trailing in a moment. But the stop losses are basically one tick above the high of the signal bar. So like right over here, here's another signal bar. You're looking to go short, one tick below the low. The stop loss is one tick above the high of that signal bar. That's typically what I consider to be the stop loss. Now, truth be told, most of the time it shouldn't even get back up here to the 50% level of the signal bar. Typically when this trade takes place, usually the market starts to really shoot to the downside. And the reason why is because what's happening is whatever institution or institutions were there, when we break down below that area, their inventory is effectively showing that it might have dried up, or at least that they've had to back off for some reason. And so then the market's free to resume that initial trend that we already had. So that's why when you get through those accumulation bars, a lot of times it'll go boom, 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 boom to the downside. Okay, and same thing to the upside on the opposite end. Right? Here's a daily chart of the example of the same thing. In fact, this daily chart, so the stop is one tick above the high here. But like I said, a dirty little secret is usually it shouldn't go ahead and even hit the other one. So in other words, what happens right back over here? The this is the entry on the trade. Okay. Now it whooshed down $30, and so you'd be trailing. I'm going to show you how we trail in a minute. The stop loss though would be if this went ahead after it broke down and made the entry, if it got back up here above this bar, which you can see it didn't do that, right? Hopefully everybody can see that clearly. It went ahead when it broke down below here, it didn't go back up here and stop you out. Same thing over here. So here's the next bar, 45, 50% off the low. You're looking to get short one tick below the low or 1 cent below in the case of Apple, below the low of the signal bar. Your stop loss is 1 tick above the high of that bar. Didn't get there. Went ahead and just started rolling over for the next 3 weeks again, about $50. Okay, so here's a daily version of this. In fact, this is right around the same time frame as this right here. Okay, so as we go ahead and we take a look here, here's another one of these bars where we're about 45-50% or more off the low. In fact, in my nightly video newsletters, I actually pointed this one out. This is the kind of stuff I usually point out like in my swing trading videos, but I actually did this one back when this happened live on our free nightly videos and shared this with everybody as well. So what happened was we made a signal bar. Well, look what happened for the next 3 days, gang. Can everybody see it? What happened? We held right at that institutional level. For 3 days, somebody had inventory that they were looking to cover their shorts, or they were looking to go ahead and buy, freshly. Okay? And it could have been either. We don't know, and we don't care. All that matters is that we were still in the downtrend. You can see red, red, red on my indicators here. It was, clearly to the downside in a big way. These are we have different types of charts here that we're kind of showing different examples on. And so what happens is we had the red, 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 and when it finally broke through that level, look what happened. It dropped here from the 430 level down to the 390. So it dropped $40 over the course of 7 or 8 days. Okay, and so let's see. What I'll do is I'll see if I can take questions at the end. Hold those questions there because I want to make sure I can get through everything. As far as how we determine the target, I'll take that one quickly. Usually I'm looking for round number supports or round number resistance. I'm also using daily, weekly, monthly pivot levels and long-term support resistance levels as well. But round numbers, for instance. So in other words, if I'm short up here, where am I going to go ahead and really tighten up my stop? I'm going to tighten up my stop right up over here. Okay, and so Paul, hold that question there because hopefully we can simplify that for you. But I got more that I want to share with you guys. I'm not going to get through all the examples. I've only got about 23 minutes left or less, so I've got a lot that I want to share with you guys on this. So on the trailing stop methodology here, what I want you guys to understand is, so here I'm firing off. You can see my indicators are all blue, blue, blue. Everything's kind of firing off here. So I'm looking for a long trade, right? So we get into a long. Now, what happens here is once I get into that long, what you need to understand is that then initially I'm going to try to go ahead and let it run a little bit, but then I want to put a protective stop in. I'm sure many of you here have gone ahead and I'm sure many of you have had a winning trade that you either gave back most of the profit on the trade or you turned the whole trade into a complete loss, right? So if you've been trading for any length of time and you try to push the envelope, try to maximize your gains, most of us experience that. So what I try to do with my trades, in fact, my personal biggest loss in my trading career was a result of me having a profit on the board, not going ahead and trailing up the trade and looking for an extra $8,000 to $10,000 of profit on the trade, and then letting it turn into a loss. So, it's like those are the kind of things that we try to avoid with this trailing loss strategy here. Something I want you to go ahead and think about. So what we do is we initially get a little push up. You want to lock in about 50% of that trade. This is just my idea on this. Lock in 50% or more of that trade initially. Now watch what happens though as we get closer to the major resistance level up above here. This is the Japanese yen in this particular case, this particular instrument that's being traded. So the what happens is, you notice the closer we get to that major long-term resistance level, the more we're tightening up the trade. Okay, so as we go ahead and we keep looking at this now you'll see that we have the next portion of this. As we're getting real close to that resistance, now we tighten up even more. So we went from locking in 50% of it. Now that we're right up near that resistance, now we're going to lock in 90% of it. Okay, then we're giving it a chance to try to break through that resistance 1 out of 10, 1 out of 12 times. It'll have a quick break through there and then settle back down. But if it's not going to do that, that's a long shot. 1 out of 10, 10% of the time, 12% of the time or so. So we want to go ahead and just lock it in right under there. In this case, it just took us out. Okay. So hope that goes ahead and makes sense. That's kind of how we look at doing the trailing stop portion. Okay. So let's go ahead and look at some those. We looked at like an Apple daily and an Apple weekly chart. Let's go ahead and look at some intraday examples. This was from the live trading competition over in Paris, France. So what you can see here is that we go ahead and have all of these sell side indications. We have sell side trends. Yeah, good. I'm glad you enjoyed the trailing stop portion there. I wanted to go ahead and kind of share that for you because it's fractal as well. For instance, if you're back on that Apple trade and it's 400, you're coming up to the $400. Ticks to please equate ticks to dollars. Well, that depends on the trade that you're taking. I think you guys are getting lost in a couple things here, right here. So, a tick on the Japanese yen here is $12.50 per tick. Okay, so this trade, there was originally $100 of profit on that previously already sitting on the dome. By the time this was done, it went ahead and had $325. So it added another $225. So you divide that by 1250 and see the number of ticks made there. Okay, so what I'm going to do is I'm just going to keep going ahead because otherwise we won't be able to get through the rest of this. But the what happens here, and I guess I should just say, you guys will be given an opportunity. If you guys when you guys first registered for this event, you were all given the opportunity to come join me for a special event next Thursday. If you didn't do that, you might want to do that now. You can go to I put the link into your chat box. It's becomeabettertrader.com/metastock. It'll take you to this page right here. So if you didn't already, when you signed up, they gave you the chance to get Rob's bonuses. Because I've got nothing to sell you today. My work kind of sells itself. You're welcome to go ahead and join us for this option. We got an options session and a live trading room session next Thursday. And so if you didn't fill that out originally, you might want to do that now. Go to becomeabettertrader.com/metastock. Enter in your information here. So that you'll go ahead and get, and also if you did previously do it, what you didn't get was this little thing right here, the 8-part Pro Trader video series. You also get that as well. So if you want to put in your first name, last name, email address, your phone number, nobody's going to see your phone number but us. So if you want to hear from me, you're welcome to go ahead and put that in there as well. So but fill that out at becomeabettertrader.com/metastock, and then you'll be invited to the live trading room experience next Thursday, as well as our options thing next Thursday as well. And if you guys have ever had a chance to see that before, it's incredible. So with that being said, so these are some examples from the international trading competition over in Paris. So you'll see that what happened was, these were live trades that I took, by the way, just to clarify that. So we had the trend to the downside here. What ends up happening, I identify a bar. This is in crude oil at the time, and I identified a bar that because this is during the European session, so obviously, I wasn't even looking at stocks and options and stuff like that during the European session. So you see the bar came 45-50% off the low. So what do? I marked that bar. Now you remember I had all those judges there, and so those judges, I was letting them know, hey, I'm putting an order out here. So what I did was I did a short, one tick below the low there, and then made a little bit of profit on that trade. Then we went ahead and we came back in, and we had another bar that came 45-50% off the low. Went ahead and went short, made some more profit. The market wasn't moving too much those first couple trades, got a lot better here. So here's where it got a lot better. So here this is gold. We were 45-50% off the low. Went short one tick below the low there, and then the market dropped out of bed, as you can see, quite a bit here, over 50 ticks, and so that was a real nice drop afterwards, and that's what we're really expecting to have happen as well. Okay, so yeah, these particular ones, Bill, they're available at becomeabettertrader.com/go pro. I put that, that was part of the little initial screen earlier. And you bet. So as we go ahead and I hear somebody rummaging around on the microphone, so I'm not sure if somebody was going to step in there. But so as we go ahead, and so this is an example where so I identified it, and then a few minutes later we got down below there, and you see it never hit the stop. It just came right down, and then it sold off pretty good. Okay, remember the stop losses are right up there, one tick above the high. Remember I shared that with you? One tick above the high of the actual signal bar. Yeah, you're very welcome, Ashok. You're very welcome. So this is great stuff. This is stuff. I mean, these are the actual live trades I took during the trading competition in Paris, France. Gang, you're getting an inside look at that. Unless you were in Paris, France, getting to watch it, And so here's a couple more. Now this is great because here's my accumulation bar, and then all I did was I put the order out there. You remember those judges that I shared? As well. I showed you the pictures of the judges standing over me. All I had to do was put the order out there, and then I showed the judges, hey, I have an order out there. So they knew well in advance, where my trade was going to be, and then I just went ahead and I waited for it to hit, and then you can see it whoosh down. Well, then I got out of that trade, and what I did. Was I turned around a couple minutes later, had another bar happen and trigger there. So I went ahead and went short again. So because what happens is when you get this trade, it's rinse, cycle, and repeat. You can go ahead and just keep going to the next one. And so then I had another one of it right down here, this bar, and then went short. And this thing spiked down real hard, real fast. I don't know if you guys can see that the tail of that spiked down there over 20 plus ticks. So then that's what we're looking for. When we get through those levels, we're looking for it to actually push to the downside. Here's another trade that I took. When I say an examples, these were the actual trades that I took during the trading competition, gang. And this was another one that I took in crude oil. So you see the downtrend in the back. You can see the bar that's 45-50% off the low. Right over here, can everybody see that? All right, and then it went ahead and whooshed down pretty fast there as well. All right, that's what we're looking for in those trades. And then we trail them the way I showed you a few minutes ago. So again, whether you're a stock trader or you're an options trader or you're a futures trader, I actually showed you the yen a little bit earlier. So whether you're a Forex trader, these tools can go ahead and actually go ahead and be used in these different environments there. Okay, so in addition to that, then again, this is these. Let's revisit some of those trades. Now maybe they'll be so much easier for you to see. So these were some trades I've recently taken in the live trading room using this strategy. So these were live trades I did right on the screen in front of people, my student family. So you see the bar 45-50% or more off the low, right? Everybody can see that now, 45-50% off the low, and then I wait for it to go ahead and break through that level and look for the short. Okay, here's the next one right over here, 45, 50% or more off the low, and then I wait for it to break through that level, right? And then right over here, one more time, 45, 50% or more off the low, and then I look for it to break down below there. And these were 3 live trades that I took using, these strategies that we're talking about right now. Okay. Yeah, the 45, 50%, or exactly. See, that's it. You can put out pending orders. That's the beauty of this. You can see it. Sometimes you'll be 15, 20 minutes early to the party. Like here, when you have like a 2-minute bar, 2, 4, 6, 8, 10, 12, 14, 16, 18, you had 18 minutes to go ahead and notice this and put this out. This is on a 2-minute chart. These are 2-minute charts. But again, as we pointed out, we also use these on 5-minute, 15-minute, hourly, daily, and weeklies. Okay, so that's a point that I think a couple people might have missed along our journey here this morning. And again, this is one of many of the trades that's been responsible for this incredible options program that we have here. So, I mean, for all of you that are looking for better options trading, we have an incredible options program. We only have one position open now because in the last several days we just closed out a bunch of other positions, especially like UVXY, of course, when the market came down nice and hard here, that got us out of that one. Tesla, we sold the calls in, et cetera, et cetera. So great stuff. So let's go ahead and take a look at a video here as well, just taking a look at a couple of these. So here's the situation right here. Let's see if I can pull this back. All right, so here's the situation, and this is like a video of this. I want to get a different color marker on here. You can see here, can everybody see that we're in a downtrend up above? Okay, my indicators are all firing off there and everything as well. And then can you see that we had these bars that were 45, 50% or more off the low? Can you see that? Does that show up on the far right-hand screen here? Can you guys see that okay? No, you actually see the signal bar right when it happens, and then you're just putting your order out there to take the trade thereafter, and it may take 15, 20 minutes for that bar to actually come back down, because initially once you get one of those bars, it may pop up first, and then it rolls back down into your way. So it pops up first, then it comes down, and that's what some of those trades did, like at the trading competition. So I identified them, and it's like, oh, there's my signal bar. So then I just told the judges, hey, look, I'm putting an order out here to sell short right over here. So I was able to tell the judges way in advance, what I was doing. So anyways, what this did was, this is a trade where the order was being put in right there because we were breaking down below the accumulation. Can you see over here on the far right-hand side of the screen, the order? It was filled. For anybody that knows how to read domes, this here, -1, it's a short there. Okay, so now the trade is in, and then what's just happening is that trade is just going in and being trailed down. See that 50%? Did everybody see that? Did everybody just watch that happen? Let's play that back again. Watch it now. There's the 50%. Okay, now just trailing up tighter because we were about to hit a support level. So let's go back over there and show why he went ahead and tightened that up. Does everybody see this big fat support level right here? Everybody see that? That was a key daily pivot. That was S2, normal maximum statistical range. So that was a key resistance. So initially you saw that he trailed at 50%. This is one of my student trades using my methodology. But then as we got down to this key resistance level or support level, the price, he went ahead then and trailed it much tighter, because if it didn't break through that level, he wanted to be taken out. Okay. Now let's go and look at another example of this. So he got taken out there. Now here's another one right here. Can everybody see? Now that we're on a weight screen, we use a black arrow. Can everybody see the 45, 50% or more off the low bar right here with our sell side indicators? 45, 50% or more off the low. Can everybody see it? I'm hoping by now you're getting better at spotting these. Excellent, 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 excellent. Good. So as we go ahead and we look at this now, what happens is, so he puts an order in to sell at 1176.80. He gets filled at 1176.70. So he had one tick of slippage there. Let's go ahead and follow the trade. The trade's about 2 minutes in length. So I'll try to go ahead and fast forward a little bit for you, just because of that. So we'll just kind of fast forward it here. It took about 2 minutes for the trade to go ahead and work out here. So he sold short at 1176.80, but he got filled at 1176.70. Okay, so the total time here is about 2 minutes on the trade. But you see what happens is it's going down, and then what he's doing is he's moving the stop down. Okay, but what we're expecting it to do is go ahead once those institutionals have given out, and we look for it to resume the trend to the downside. Then what we do is we look to follow that down. So now he's right about, so he's at 1174.60. He's one tick away from getting filled, which was 1174.50. So he did about 22 ticks on the trade, which on the Russell is about $220 there. Okay, so as we go in, we let him put up his thing here. So he entered the trade? He got filled at 1176.70, got taken out at 1174.50. So 22 ticks. That's $220 there in a little over 2 minutes. Okay, so that's the trade that we're looking for. We're trying to spot that in that downtrend. All right, and that's the key, is identifying the proper downtrend. So that I just wanted to show you, different ways, gang, that this goes ahead and gets used, and the this is really important. Whether it's my international trading competitions over in Paris, France, whether it's this fantastic options alert portfolio we have, whether it's all the trades you saw that I use this for, like in my live trading room. We showed examples of that. It's a very great, well-rounded program, for forex traders, stock, options, and futures traders. All right, and so pretty great stuff there. So what we did was, again, I don't have anything to sell you. I'll leave that to everybody else, gang. I stand on my own merits with all these domestic and international trading competition wins. You guys are welcome to join me. If you didn't go ahead and already do it, you can go to becomeabettertrader.com/metastock, and you can are you going to have a live in-person seminar? I will be at MetaStock's live and in-person event in October of this year. MetaStock got really rave reviews on the event that I did for them last year, so they've asked me to come back this year. So I will be there live with them in October of this year. And so I just put out that little link for everybody to go ahead and join in. This right here, it will give you access to me next Thursday in my live trading room, and our options weekly options session that we do as part of the options alert program. That's also going to be on Thursday of next week. So plan to join us all Thursday morning for the live trading experience. The last public event that I did here recently, I did 4 trades that morning. So great stuff, and a lot for you guys to go ahead and learn from me. So I appreciate you going ahead and, like I said, being here. For all of you that have been here since the very beginning this morning, 5 o'clock Pacific time this morning, I see more and more people have kind of come in as they're waking up and able to get in for the day. So great stuff. And I hope you guys learned a lot from this, because it's, my very real, trading. Again, I showed you the live trades that I did at the International Trading Competition in Paris, France. I showed you our fantastic options portfolio. We just hit officially the 97+% profitability mark here last week with the closeout of like UVXY and Tesla. So very excited about where we're at with all of our different programs, and using this setup amongst one of those. And thanks so much. You're absolutely welcome, gang. Well, like I said, a lot of people talk about trading. I do it, and so this is one of the reasons why MetaStock likes to have me here. And these are real world actionable trades that I take. So no theory, just the real world. So I hope that helped, gang. I'm going to turn it over to you, Jeff. I hope we ended in the appropriate amount of time there. Give you a minute to reset. But thanks, gang. Very nice of all of you. And we'll see you at this very special two-part event next Thursday. And even if you did previously register for it on the thing, if you sign up on this little thing, you'll also get that little 8-part pro video series. So a little extra thing for you as well. Get you some more videos in the meantime prior to seeing me next Thursday. Yeah, you're absolutely welcome, gang. Thank you so very much as well to each and every one of you. It's very nice of you. Jeff, over to you, and thanks for such a great group there today.
Awesome. Thanks, Rob. Really appreciate your coming in here. I don't know who decided to set this up so early this morning. It was probably me, but we definitely wanted to have Rob. We knew he was going to be traveling this weekend, and it's great to have you, Rob. Love hearing from you. Thanks so much for coming this morning.